Excuses, now it's money time. In this video, I'm going to go over ticker ACIU. On this date, it had a pretty substantial gap up and a pretty big move. And I just want to highlight the chart, a little bit about how you could have capitalized on this stock in a day trading opportunity, shorting penny stocks. So when we look at the 1 year, 1 day history, which means every candle on this stock is 1 day of action. And as we can see, two big days stand out, and they're both big red days, where this stock had a substantial gap up, which means it opened higher than the previous closing price, but had a big red day as the fact that it closed relatively near the lows, or near where it previously closed. So when we look at the 1 day, 1 minute time frame for how it moved today, all the evidence points to shorting this stock, because it went from $8 a share to $25 in roughly 10 minutes at 7 a.m. in the pre-market. So when you look at the mini candles, which mean every single one is 1 minute of action. So from here to here is 2 minutes, 3 minutes, 4, all the way up to 25. As we can see, it failed to break 25, as that is the resistance. The stock pulled back to 21, channeled, and when it went under 25 and tested this line as the resistance, which was the old support, that signifies the bears are in control of this stock, and it should continue to downtrend from there. So ideally, you can try and enter in this range in above 19 and below 22 as your ideal entry when you short a stock, which means you're selling the stock first and you'll buy back later, hopefully at a lower price, to make money on the play. So when we continue to see that the support broke, and then the next support is the new resistance is the old support, which means the new ceiling was the old floor, that is still very bearish, which means the stock should continue to go in the downward direction. And because it was such a big move from 8 to 25, 3x, the fact that the pullback is over $1 a share every single candle is a great opportunity to make some money. So then you continue to hold as the bears are in control, and you should get out around 12 near market open, or you can continue to hold for a substantial gain all the way to 8. I mean, this is a very big move, and each candle represents its own story. However, in the grand scheme of a day trade, this is a very significant play, where if you can get in at 20 and get out at 8, that is a huge return. But let's be realistic. How often are you going to be able to hold that long and want to take that big a win? But let's say you do get in at 20 and you actually have a realistic target price of 12, which is $8 a share. So if I'm going to go for $8 a share and this move was going up and down $1 to a candle, I'm going to risk $3 a share, making my risk to return ratio roughly 2.66 as I'm circling here. So if I short at 20, I'm selling first, and I'm looking to buy at either 12 or 23, 23 being a loss of $200 on a $10,000 account on a 67 share position, or I can try and hold till 12 to make $533, which would be 5.3% on my $10,000. So in 1 day on a $10,000 account, you could have returned 5.3%, which is pretty ridiculously awesome. So cool play. I just wanted to highlight the opportunity there is if you're up at 7:30 and you're willing to short a stock here at 20 and hopefully hold for a big return all the way to open at $12 a share, $8 a share difference. God bless you. Thank you so much for watching, and looking forward to another trading opportunity tomorrow. Have a good Friday, everybody.